Let's take a look at some active opening range breakout setups. Now, first things first, I want to find a bias, long or short. To do that, we can take a look at the internals along with what the broader markets are doing as well. So if we take a look at the internals here, the volatility of the volatility index seems like there's a lot of just back and forth going on. No real clear bias just yet. We see the bulls have tried once, or rather the volatility has tried to increase once, decreased, increased, decreased. We're just having a lot of back and forth here. At the same time, we can see that our advanced decline spread has been rallying for much of the day, but doesn't really embody a lot of strength here. I don't think you could call this something that would indicate a bullish trending day. Next up, if we take a look at our major index markets here, the S&P to me feels like it might be rolling over. Same thing with the NASDAQ. If we zoom in to the NQ chart, here you should notice a familiar setup as well with the 1-2 punch, all suggesting more signs of bearish activity. Now, with all of that in mind, I'm trying to find some opening range breakout setups, and one of them, which stands out to me, is IBM. IBM is triggering a 15-minute opening range breakout. This is a short side setup, and I filtered to short because I have a short side bias. And over the past 3 months, this setup has had an 86% win rate. On average, a positive expectancy, a positive P&L. Our risk to reward is typically 2 to 1, but you should see that we actually are able to make that 1 to 1 because we're getting a better entry price. The P&L is currently negative compared to our entry, meaning we're getting a better entry than what we had at 6:46 a.m. Pacific. In terms of our opening range width, we're close enough to the average width, though today's range is clearly a little bit higher, suggesting more volatility. Now, if we come into a chart of IBM, here's what it looks like. To me, it feels like we're starting to see signs of potentially rolling over here. If we come into that 5-minute time frame chart, we had the bearish breach of the opening range breakout, and so far we've rallied back up to the midline. This is how we're able to make our risk 1 to 1. Our stop is outside of the high that we created for that 15-minute range, and our first target is down here near T1, but given that we're getting a better entry, we're actually able to up that target closer to 182.49. We don't need to see price make as strong of a move. T1, or our original T1, can actually become our T2. So with that in mind, now we need to find some sort of trigger to get excited about this setup. For me, that trigger can be something as simple as a momentum cross. So far, we've seen that momentum has tried to cross once, the buyers came back in, the momentum's trying to cross again. So far, it feels like we're getting a little bit of selling pressure. That 1 minute to me is a little aggressive, so I'm going to be on that 2-minute time frame chart. And if we do start to see some signs of price here starting to roll over, I'm going to want an entry near 183.30. We are starting to see that first momentum cross, so maybe we can even start to get some orders in place. Let me use a 2-bracket order so I can show you how I would set up this particular position. In both cases, we would have the same stop, but here, our entry that I'm looking for is 183.33, so I'll place the order there. In terms of our stop, that's outside of our opening range high. Our first target we have at our opening range low, which is near 182.50. And for our second target, I am looking for T2 near 181.66. So this is the overall premise of the trade setup that I'm looking for. Let's see if we can get a fill here with maybe some small potential rally here. All right, and we just got our fill at 183.33. So now we essentially sit back and we let this trade play itself out. We have our targets down here. It's still early on in the day that we expect to see a little bit of chop. We might even go into this deeper territory. Again, this was just a sample using a 2-bracket order, but for those of you that like to leg into trades, as we get into this zone right here, you might actually like to add more positions, or if we see another momentum cross, you might add to what should then be a winner. So some potential ways that you might continue adding to this overall idea in case you don't like to just place the order once and get going. After a little back and forth, it feels like so far we might be seeing that little bit of a sell-off now into the lunchtime hour. About 15 minutes left until 9 a.m. Pacific, so let's see if we can hit at least T1 by then and move our stop to break even. We just hit the first target, so now for that remaining share, in this case, since we only have one share or a 2-share position, I'm going to move that stop to 183.30, 3 cents below our entry, and we leave our T2 where it is, try and see if we can hit that. So that is the premise of using the opening range breakout scanner to find trades in which we can participate in the direction of the broader markets. Let's wait and see what happens with T2. The internals right now are all suggesting more of a risk-on environment. Maybe into the lunchtime hour that changes, but at least we were able to pull out some money from the market. Here's how IBM turned out for the rest of the day. We ended up making a move all the way down to our T2 level at 181.66 before we saw IBM reverse and rally into the close. Now, IBM's also reporting earnings after the close, and you can see how the sell-off has already kicked into full gear off of its earnings results. The actual trade that we were participating in did not have any kind of overnight risk. We saw that the sellers gave us that first little clue that, hey, we have selling pressure available here inside of IBM. We used our live scanner to not only find this trade, but also see some real-time backtest for that particular ticker in IBM. We saw it had a high win rate, high probabilities, high expectancy, high P&L. Using all of that, that gave us the confidence to look at IBM for a short side entry, and we patiently waited for a pullback up to that half range level. Here's where we built that initial position. Our T1 ended up being the breakout level, and our T2 was with the break-even stop down to what was our original T1. This allowed us to skew our risk to reward, where we were risking 1 with our stop outside of the ORB high to try and make 1 for our first position, a 1-to-1 risk to reward. On that second position with the break-even stop, we were really risking 0 to try and make, in this case, 2 units compared to what we originally had for our risk. In case you'd like to learn more about our opening range breakout live scanner, see some other examples, I'll leave links to our platform along with videos in the description box below. Take care, everyone. Good luck trading, and I'll see you in our next update.